Okay, so we're going to go over what we did yesterday, which was the 3 most common credit reporting errors. And the first 2 were pretty much your own opinion, like what you thought was important to look at. Everybody said fraud, of course. And then a few people said that as a high school student, you'd worry about the misspelling of your name. Who said that? A few of you did. I think that's a good thing to worry about, because that's maybe like, I don't know, maybe you're not as concerned about fraud because you don't have loans and credit card things out there yet. So yeah, maybe try to get your name fixed. I did not address this one thing, but ladies, if you get married and your last name changes on your credit report, it will have like probably a lot of different spellings. Like mine will say Amy Hoyt, which is my maiden name, or it'll say Amy Elizabeth Hoyt, Amy Elizabeth Hoyt Rust, Amy. It's listed like 10 different ways on my credit report. And ladies, that happens when you get married because of your name changing. And if you ever had a credit card or any type of loan in your maiden name, that name's gonna show up. So don't be worried about that. That's okay. And I didn't address it yesterday. Okay, question 3 was a little weird because I think I know the answer to it because I just know it, but it really wasn't very clear in the article. So as long as you put an answer there, I did not count it wrong. But it says, how would you decide whether to dispute the error with a credit agency or with your bank or lender? So in the article, it talked about the credit agency pretty much doesn't really, if something is true, they're not going to, even if you write a letter and do all this kind of stuff, let's say you were late on a credit card payment. That's true, right? Were you late on the credit card payment? Yeah. Okay. So they're not going to take that off there. What you're going to have to do is you're going to have to resolve directly with the bank first. Then once you get it resolved with the bank, then if it's accurate, whatever, then you can try to go to the credit reporting agency. I hope that made sense. But no, not really. Okay. Let me read what I put up here. Maybe this will make more sense. If it's accurate, like the report is accurate, you were really late, try to resolve the problem directly with the bank. For example, if you accidentally missed a payment, so it was true, the payment was late, contact the bank, arrange to pay up, and ask if they will resend what they sent before you being late. Because the bank can then say, she was late, but she got it caught up, and I want you to go ahead and take this off your credit report. And they can have the agency actually take it off. But the credit agency is not obligated to investigate frivolous claims. Your frivolous claim meaning you were late on a payment, because that would be millions and millions and billions of people, probably. Does that make sense now, kind of? If you read that statement a little better. And then what are the steps to dispute an error? You have to make sure, number 1, that it's legitimate. Like you opening a credit card or you not opening the credit card and it shows up on your credit report. And then you have to send a letter to the bureau reporting the error. It said on there, remain patient, and then you might have to do it again. Here is the main thing, and I didn't talk about this either, but it did say in the article, you should always, 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 if you contact the credit report agency, you should do it in writing. Why do you want it done in writing? Record. That's exactly right.
You handwrite it?
Yeah, like not handwrite it. You could type a letter, but have it in writing, because if you call the credit reporting agency and some person says, oh yeah, we'll take care of that and fix it.
They never do.
They never do. Yeah. A lot of times. And as you get older and you start dealing with customer service agents, has anyone ever dealt with customer service for anything before?
I've heard my mom talking on the phone.
You've heard your mom talking on the phone, and her blood pressure goes up about really high, and her face,
400%.
400. Yeah. Yeah. I have talked to people who have straight out bold-faced lied to me. It's usually phone companies. They drive me nuts. But anyway, it happens. And so with something this important, like your credit report that has to do with your credit score, you really need to do that in writing. And is an email okay? Yeah, that's in writing. You have credit that someone's especially if they contact you back, that would be fine. But I wouldn't do too much over the phone. Okay. So let's talk about, Huh?
Unless you record your phone call.
Well, they usually record it.
Well, I know, but having to getting that back from somebody, like if they say that you
This is killing us.
record, then what's wrong with Tesla?
We're literally ranked 240.
That's okay.
Hold on.
They're worse.
See.
Okay, I'm recording this, so let's move on. Okay, so I want you to go into Google Classroom, and I want you guys to open up today's, because today we're actually going to talk about the actual score, like how you get scored. So I want you to open up this Google Doc, and we're going to look at what involves, like what makes up your credit score, and we're going to look at two different people and some of the things that they've done as far as like opening credit cards, and we're going to guess what their credit score is, and then we're actually going to go to a website that's going to tell us and see if we are, if we kind of are right there. So I'm going to open up this video and show it up here first. And then I've also put a little pie chart in there that kind of comprises what a credit score is made up of. And if you don't finish today's assignment and you need to go back, you might need to go back and watch the video again. But I think we'll finish it today.
Jasmine. Jasmine is a college student attending State University. Like many college students, Jasmine has seen a lot of her friends and family use credit, whether it's through a mortgage, a private student loan, or simply a credit card. However, Jasmine has always been too afraid to use credit herself, leaving her with no credit history and a non-existent credit score. What should Jasmine do? Well, beyond watching our two other introductory videos centered around credit, Credit Cards 101 and Loans 101, her next step is simple. Understand her credit report and score. A credit report is straightforward. It's essentially a detailed history of your credit, covering everything from your payment history to the age and status of your accounts, as recorded by the three major credit bureaus in the United States: TransUnion, Experian, and Equifax. As you can imagine, this is quite a lot of information for anyone to process. So, one company actually created a simple way to summarize this information, called a FICO credit score. This is a calculated number between 300 and 850 that summarizes your credit report. The higher your score, the lower the interest rates and the better the rewards you'll get from banks. Plus, a high credit score is also vital for a number of other things, like getting affordable insurance, finding an apartment, or even qualifying for a cell phone plan.
So you guys, did y'all hear that? It's not just for getting loans, but it's for like insurance. They could actually check you and pull up and get your credit score to qualify for life insurance or car insurance. And you're thinking, well, what does that have to do with my finances? What does it all come back to? You being what? A big R word. Responsible. Yeah. So this is not always the true case, but if Caleb right here had a really high credit score, let's say it's over here on this end at like 750, what does it show him maybe as a driver? If he has a really high credit score, what would it show? What would the insurance company think of him as a driver? He's probably a really responsible, good driver, right? Because that's what they're thinking. And so they can actually pull your credit score and they can base your insurance off of that. It talks about, I think this one said about housing, like for getting an apartment, it's going to show whether or not you've made past payments on time, or it said even with a cell phone company. I've never been asked to pull a credit score for any of those things, but I guess it could happen. Because you have to give permission for them to pull your credit score.
Ironically, for such an important number, getting your credit score actually used to be quite difficult and expensive. But now, we recommend a website that makes it free and easy for you to get your credit score and report online. This is great for Jasmine, but she's still confused about one last thing. What exactly makes up a credit score? Well, a credit score is actually made up of 5 components, and from understanding each one, you can derive the 4 major ways to improve your credit score. Part 1, payment history, 35% of your score. Because this is such a large number, it reveals the importance of paying every bill on time, even if it's just the minimum. If you're struggling with this, we highly recommend setting up automatic payments for everything, especially your credit card.
And those automatic payments could save you. I mean, it's maybe not that you don't have the money. You just are a busy lifestyle. Maybe when you work someday, you might be working a lot. Maybe you're going to be what is it that you're wanting to be? Some type of surgeon or something? What is it?
Yeah, I am a good driver.
Oh, okay. You are a good driver. But I'm just saying, what if you have a busy lifestyle and you're working all the time and you forget to make your payment? It's not that you didn't have the money. It's just that you forgot. So setting up automatic payments for bills could really save your credit score, right? Yes.
Part 2, credit utilization, 30% of your score. To avoid damaging this, we recommend not exceeding more than 30% of your maximum credit line, both total and for each individual account. If you're struggling with this, try paying off your balance early a few times a month.
Okay, let me say what that means. If you had a credit card, let's say this one circle right here is your credit card, and you had $100 on your credit card, which is not much, right? But you had available to spend $100. What's 30% of that $100? $30. Did I just say 30? What's 100% of? What did I say?
You said what's 30% of that?
Okay, I did say that right. 30% of 100. So that means that you should not owe or exceed $30 on that credit card. But $100 is not what, usually it's probably like $1,000 limit. So how much should you not owe any more than $300? Does that make sense? Or it said if you have more than one credit card, they should each total should be 30 and not over 30 on each credit card, because that's going to lower your score. So is it okay to have a balance? Yep, it's okay to have a balance, but just try not to exceed 30%, because 30% of your score has to do with this. Okay.
Or try asking your bank for a credit line increase. Part 3, length of credit history, 15% of your score. The existence of this component means, rather counterintuitively, that you shouldn't close out your old credit card accounts unless you absolutely have to, as otherwise you'll hurt your credit score. Part 4.
And I hate that hurts your credit score, because what if you applied for a credit card and you had that one open, and let's say you paid it off because you were able, you got older, you got a job, and you were able to get a different credit card with a better rate. Would you not want to close that one out so it's not just hanging out there?
Just leave it and
Yeah, you could leave it open. I just feel like, there's room for someone to steal that number or something. I would myself want to close it out, but essentially it could hurt your score. That is dumb. I agree. Yeah. I don't agree with that one. I don't like that. Ugh. But it doesn't comprise as much. It's still a pretty large chunk, but small compared to the rest of the number.
Recent inquiries for credit, 10% of your score. This one's simple. Don't apply for new credit cards and loans unless absolutely necessary, as each credit inquiry will slightly lower your credit score by a few points for the next 12 months.
And we saw the inquiries on the credit report, that they had tried to get maybe a loan through that Toyota Financial, and then there was a different inquiry, I can't remember, and those can hurt you.
Finally, part 5, types of credit used, 10% of your score. Unfortunately, we just don't have a rule for this one, as we don't recommend applying for multiple types of credit just to boost your score.
You guys understand
Finally,
the multiple types of credit, student loan, mortgage. Can you help that though? No. I know. I don't understand. I don't know I didn't research who came up with the credit score, but I'm thinking that one doesn't really fit that either, because I don't know. You're not going to just have one type of loan. You're not going to just have a mortgage loan. You're probably going to have an automobile loan. I don't know. That doesn't make sense to me either, but.
Before we conclude, we just have 2 more things for Jasmine to keep in mind. 1, to build a credit history and thus your credit score, you need to use credit. And the easiest way to do this is to open a credit card, like a secured or student credit card, that are designed specifically for people with no credit history. And don't worry, we teach you everything you need to know in our 2 videos, Credit Cards 101 and How to Build Your Credit.
Advertisement there.
2,
a little extra.
Be sure to check your actual credit report for mistakes at least once a year, as these errors can dramatically affect your credit score. Should you find one, be sure to contact the credit bureau as soon as possible.
And let me explain this up here, because I didn't really realize it talked about these. But do y'all know the difference between a secured credit card, just a normal credit card, a secured credit card, and a student credit card?
Well, I guess secured is probably where it's like backed up by collateral.
Yeah, it is. And it's kind of like, it's almost kind of like, to me, like a debit card, but it's considered a credit card, like where it is backed up with something to where it can be pulled if you didn't make payments on it. But you're exactly right. What about a student card, credit card? Who's this tied to?
Your mother's.
Yeah, your mom and dad. This is tied to your parents. And so it might be in your name and have your social security number tied to it to where you can build credit. Ultimately, the person responsible is who? Your parents. Yeah, in case, something were to happen. And then just a regular old credit card it's all on you.
Hopefully you and Jasmine now better understand how credit scores and reports work. Be sure to check out our next videos, which cover common mistakes and best practices.
These
for
are actually
credit
pretty
cards
good
and loans.
good
And
videos.
be sure to check
I
out
think
our
that's all.
website. You can find more educational content, your free credit score, and great credit card
I think that's all that we talk about. Okay. Okay, so let's look. Let's go back to this. And I've given you guys right here just that little mix so we can look at it. And we're going to look at Sam. It says Sam Spendthrift is a college junior. He couldn't wait until he turned 21 so he could apply for a few credit cards. Here are some details about his profile. So we're going to do this one together. I filled it out earlier to kind of see what, and you guys can guess what you think. Okay, so we're going to put a plus if we think it improves his credit score, or we're going to put 2 dashes if we think it is a negative effect or decreases his credit score. Okay, so currently he has 3 credit cards. Could this be a positive or is it a negative?
It could be a positive.
I think it could be a positive too. I put positive right there.
Even though wait, how old is he?
Well, he's 21.
Okay, so he applied for 3 credit cards like as soon as.
Well, we don't know that. We're just reading these in order.
Oh, okay.
I know, because some of them I was thinking, well, it kind of depends. So I just took it as we're just reading it in order. Okay. Okay. He got his first credit card 8 months ago.
That's plus.
I put it as a negative. You can put whatever you want, just your opinion. I put it as a negative because I'm thinking he got his first credit card 8 months ago, and now how many does he have? He has 3. So he opened a lot of credit really quick. So that was my opinion. You put what you want though. No right or wrong necessarily. He doesn't have any student loans.
That's good.
I think that's a positive because it said that one small part right here is the credit mix, the 10%, and it looks like he just has credit cards. So he doesn't have a lot of different types of loans, He applied for 5 credit cards in the last year and 3 have been accepted. That's definitely a negative. You can't, unless someone try to say something positive about that. Okay. Yeah, I can't.
Yeah, definitely.
He opened his last credit card 4 months ago. This is when you kind of have some more detail. So this to me would be a what?
Negative.
I would say it's a negative. All 3 of his credit cards currently have a balance as he has had trouble paying off his card each month.
Obviously negative.
That's obviously a
He's
negative.
got a background.
Okay, so this one we don't know quite enough about because it says he has $4,000 currently outstanding total on all his 3 credit cards. But we don't know how much his credit limit is, correct? Because how much did we say that we didn't want it over? What was that percentage? 30%. So right now we don't know anything. So this to me could be a positive or a negative. Okay. Well, we're about to find out. He missed a payment in the last 3 months when he forgot to notify the car company that he'd recently moved. He was 30 days behind on making a payment. Negative. But he has no cards currently past due. So there's a positive. His credit card balance of $4,000 are about 65% of his overall limit. So now we're getting a little more information. So that's definitely a negative, right? Can't say anything positive about that. Yeah. He has never gone through a bankruptcy or other proceedings. That's a positive. Okay, so now the credit score can range between 300 on the low end to 850. Okay, so I want you guys to put a number in there. I'm not going to put a number up there because I've already worked this out and I know what his credit score is. And so I want you just to guess a number, what you think it is. Does everybody have your number in there? And you don't have to go back and change it. You're not getting counted off for guessing, okay? So now we're going to go to number 3. We're going to go to my FICO, however you want to say it, credit score estimator. And we're going to put in Sam's information. Okay, so I'm going to split my screen so I can see everything. So I'm going to go up here. It goes in order. Get that smaller. How many credit cards does he have? 2 to 4, right? Because he has 3 credit cards. So we're going to pick 2 to 4. How long ago did you get your first credit card? How long ago did he get his first one?
6 and 2 years ago.
Very good. Between 6, because it was 8 months. It's just following in order right here. Do y'all see that? How I'm getting this? Because you're going to do it on your own here in a minute. Okay. How long ago did you get your first loan? He's never had a loan, has he? How many loans or credit cards have you applied for in the past year? 3 to 5, because it's been 5. How recently have you opened a new loan or credit card? 3 to 6 months. Very good. How many of your loans and or credit cards currently have a balance? Yeah, because all 3 of them, yeah. Besides any mortgage loans, what are your total balances on all of them? Yeah, $1,000 to $49.99. When did you last miss a loan or credit card payment? 3 months ago, right? Because it says he missed a payment in the last 3 months when he forgot. So we're going to choose this one. What is the most delinquent you've ever been? 30 days. How many of your loans are currently past due? 0. What percentage of your total credit credit card limits do your card balance represent? Ooh, we're way down here, aren't we? Okay, and the last one has 10 years. Have you no bankruptcy or anything?
Oh, that's pretty close.
Okay. That's not bad.
I put like 300 something.
I said
I put
550.
438.
You said 550. Who was right in the middle? What'd you guess? 580. Oh, you were right on it. Anybody else get in the middle? What did y'all guess back there? 502. You were pretty close. What'd you guess, Jennifer? 500. How much? 510. You're pretty close.
I guess 300 something. So I thought he was.
I got like
You thought it was way
I
bad.
thought he was-
He did have some positives going for him because he didn't have any student loans, so that small percentage of the pie was good, right? I mean, he did have credit cards. That's a positive because you do need some credit to establish credit. I mean, so he was okay, but if you
Late on one payment.
yeah, 1, 2, 3, 4, 5. He was about 50%. I probably would have guessed it to be a little bit lower. So, okay. So what I want you guys to do the rest of the class period, you have 25 minutes. I want you to, first we need to answer the rest of the questions. What does Sam's score say about his credit worthiness? It's not bad, but he needs to
Doing some work.
he doesn't need to apply for any more credit cards, right? He needs to pay off some of his debt. He needs to make that a priority because, number 4, he needs to pay off this debt because look, 30% of his score is how much he owes. And he owes 65%, of his credit limit. So he really needs to work on paying off his credit cards. That's my advice I'd give to him.
Wait, so that's number 5.
That is kind of 5. So he needs to pay it off, and that's what I would say.
Oh, we gotta do this for like several people.
No, just one more.
Oh, that's,
Just Jessica Credit Smart.
and then some Danielle debit for person.
What?
There's one that has 2 questions.
Oh, I did do it. Oh, wait.
It just has 2 questions. She has no loans outstanding.
Oh, okay. This is because this one's like not very much at all. So you're gonna find out her credit score is not good at all.
And she only because she doesn't have much credit issues.
Right. Yeah, so you'll do it for 2 more people, and then that's all you're doing today.